Welcome to the Spotlight Dialogue episode 11, the midday show about circular economy, where this episode we will take this dialogue, look for strengthening is a sure way to appear in the forefront of sustainability and keep asking questions. I'm your host, Stephen Poon. Good afternoon to all the audience tuning in. The Spotlight Dialogue episode 11 is brought to you by the regular team of the Special Interest Group in Circular Economy from Integrated Sustainability and Urban Creativity Center, acronym as ISUC, also known as ISUC, at Asia Pacific University of Technology and Innovation, APU. Later on, we will hear from Chris Daniel Wong, the founder of MCM, Max Capital Management Co-Metro Venture. For those who you don't know, Chris Daniel Wong is also the president of Malaysia Digital Chamber of Commerce, MDCC, a serial investor, entrepreneur, and a corporate restructuring strategist with a passion to serve in nation building. Specializing in corporate finance and business capital funding, he has helped various businesses under his portfolio to successfully raise capital from investors. He is currently the lead advisor for several companies under his portfolio embarking on IPO listing, which is an initial public offering on Bursa Malaysia, the Australian Stocks Exchange, and the Singapore Exchange. In 2013, he founded Co-Metro Capital and Private Equity LLP Limited Liability Partnership, together with several like-minded investor entrepreneurs, and has become very active in the company, serving as the CEO and the director since 2017. He also sits on the board of directors. Luckily, Chris Daniel Wong is on hand to give us a quick lowdown on the topic: promoting sustainable finance approaches and strengthening capital market alignment is vital. Please welcome Chris Daniel Wong. Hi, Chris. How are you doing?
Hi, Dr. Stephen. Very good. Thank you for having me today, this morning.
Good afternoon. Good afternoon to you. And I'm so thrilled that you are here with us. So let's begin a little bit of kind of entry, before we get into the topic. Is the capital market doing good the last couple of weeks?
Well, it depends on how you look at it. Obviously, if you look at the major stock indices around the world, especially US, it has not been doing good at all. I think predominantly driven by two things: fear of inflation and recession is coming. It also partly because the US has been printing a lot of money last year during the COVID. So when they ease, when QE is eased, well, there's a lot of liquidity, but when there's a lot of liquidity, you drive up prices. So it's chicken egg story, chicken egg story.
Yeah, I know that. I tried to follow out the last whole week, the whole stock, which is stock market in Malaysia. I was just blown away. Yesterday, I was just shocked. It's just totally Red Sea, So I know what happened to us actually, and then also I was quite a little bit. I feel uncomfortable because I have invest some of the stock as well. It's just getting me a little bit worried. So hopefully it's gonna pick it up, which is the next few weeks.
Yep.
All right. Okay, Chris. Okay, let's set the scene before we get into the topic. Talking about sustainable finance and also strengthening the capital market today. I think it's a really, really interesting topic today, and also especially nowadays. Right. Sustainable finance is a new concept whose meaning is still evolving, I believe so. Since its inception, the World Investment Report, which is WIR, has provided analysis of direct investment and international production, focusing on the downstream segment of the investment chain. More recently, with the growing need of to mobilize the vast sum of the capital needed to meet the SDGs by the 2030. The WIR, which is the World Investment Report, has expanded its focus to analysis of the global financial markets ecosystem, the upstream segment of the investment chain, despite the qualitative influences of the foreign direct investment, which is the FDI. Portfolio investment nevertheless offers a potential source of the capital for sustainable development. And the ecosystem surrounding global capital market here is increasingly aligning itself with sustainable development outcomes, including the SDG. So in seeking the map of the contribution of the global financial market ecosystem to the SDG, as well as the policy recommendation for the further leveraging capital markets for sustainable development. So first of all, we look at the product and services here. What product exists in the financial market ecosystem, such as equity funds, fixed income, products, and derivatives that can support a transition in the investment strategies to more sustainable approaches?
Well, if you look at it, what products are in the market, financial market? Well, the financial market basically has a lot of derivatives products. When we talk about derivative products, we talk about equity, we talk about bond, we talk about equity bonds, we talk about tokens or NFTs, non-fungible tokens, and there's a wide range of financial products, but it's all summed up as derivatives. Now, when we talk about sustainable financing, we are only talking about 4% of the total global market fund. Actually, the total global market fund of sustainable financing only make up 4%. So we have a long way to go. When I said 4%, I cited from the WIR report that you mentioned just now. So the questions remain about how fast and how soon can we, launch more sustainable funds. But the sustainable funds that we have in the current market right now, if you look at it, 25% of those green funds, sad to say that it has about 5% exposure to fossil fuels, right? Or I would say that they about some cases about 20% is actually questionable green funds. Now let's take for example this week, right? It's all in the newspaper in Malaysia that electricity tariff is going to go up again after a hiatus of 2 years. Because we have not raised electricity tariff since the pandemic. So right now they felt that it is the right time to raise. But what are the reason or the justification to raise it? Because fossil fuels or coals have increased in price due to the war in Ukraine and Russia. So again, we got to bring this into questions. I'm not questioning TMB, but I just say that we got to bring this into questions. There are a lot of funds that is investing into TMBs, and some of these are thematic funds. It means that funds with an impact investing focus. So let's say, for example, I invest into electricity provider, so-called green funds, but yet they are so reliant on coal to produce the electricity. So again, we are not talking about political will, but we are talking about business will. Are we willing to do business the new way? All right. Now, some questions, some old age questions says that moving into sustainable products are more expensive than the conventional product. I do agree. I do agree. Right?
So why are we doing that?
So for example, the highest range of Tesla electric car is actually $105,000 US. Well, yesterday report says that from 105,000 US dollar, right now it 104,000. Right now it costs 109,000, so increase of 5,000. So, but the range of Tesla electric car is still expensive, beyond reach of many people. You plus the tax in Malaysia, probably you end up buying a Tesla for more than R1 million. Now, why are we doing that? Because the scale economy for demand of such product is not there. If the society has the society will, as I said, political will, business will, and the people will. If the people has the will to change things into sustainable products, I am very sure prices of this product will go down actually. Let's take for another example. Recently, there's a buzz around Mamak shop, our local Mamak shop. We have robotic waiters going around sending drinks and food. All right, such system has been used in China for 2 or 3 years. But today in Malaysia, we see that because shortage of foreign workers, we see that this kind of what we call that robots has been used as to replace waiters. And the first one to use it in the market, if I'm not mistaken, is actually the Hai Di Lao Steamboat. Hai Di Lao Steamboat use these facilities. Now, it looks simple, but it's actually a step to sustainability. We are doing away with foreign workers, and we are using AI to replace human resources. In a way, it is actually very green. In a way, you need financing to transform your business. In a way, it would drive prices down, because as your cost of manpower goes down, the cost of service delivery will also goes down. So it's actually the will of the people whether they want to do it or not. Another example I want to give you, Dr. Stephan, we talk about reusable cups. Do we have the aptitude, not attitude? Do we have the aptitude to carry a small bag around with a reusable Starbucks? I do that with a reusable Starbucks mug. If I go to Starbucks, I can just use my mug and get my coffee. But yet people don't do that. So again, people say it's expensive. Yes, I agree, but we don't have the will to actually drive through the transformation process. So that's my response to your question.
Okay, great. Chris, we're gonna move, which is from the products and the services, right? I think definitely there is the correlation to the asset owner on the financial service provider as well. Let us look at this aspect, and how can asset owners, in particular institutional investors such as pensions and sovereign wealth fund, as well as financial service provider such as insurance company and banks, exert a greater influence on their investor through active ownership, including engagement and voting, as well as allocate more of their portfolio to SDG sectors and the developing country markets?
Well, my response to that is impact investing. Now, we got to understand what does impact investing means. As compared to traditional portfolios, for example, you invest into equity stock markets, while the prices go up and down, it is determined by how many people will want to buy that stock that day. And in a way, we Malaysians would say how many people is going to goreng that stock. But it's very different. Now, when we talk about impact investing, the payout to the investors is based on achievable KPI. If we meet certain KPIs, all right, then you will get certain internal rate of returns or the hurdle rates we said it, all right. If you don't meet the KPI, you don't get the returns. Now, again, is the will of the investor to accept such deal that is being curated. Now, we talk about the Sustainable Development Goal. We talk about the goals of bringing our climate down by 1.5% by 2025. Now, for us to achieve that goal, we definitely need investors through thematic green bonds to invest into such industries, as per se. All right. But will these investors be willing to accept this kind of impact investing hurdle rates? So if the trend starts, and then other people will start to follow. Why? Because this is best practices. For example, if the top private capital company in the world, like Bain Capital or maybe BlackRock and so forth, right? Like Bank of America, if they start this trend, will we not follow the herds? So generally, people will follow the herds because you know why? Or the United States big players or the European big players are starting these trends, so we want to follow because it is the in thing. So when we start to follow, the investor will have no choice not to say no, because why? Everybody is doing the same thing, and everybody is publishing the year-end report citing all these impact investing's KPI, KRA. They only pay out according to the achievable, measurable metrics.
They're always the benchmark. They're always the big brother, isn't it?
So what I'm trying to say is that we have the knowledge, we have the theoretical aspect, but again, will we be able to, have the will to do it? All right, because greed always takes, I repeat, greed always takes precedent, right, over certain decision that we make into impact investing.
Okay, Chris, let's look at the institution and regulators here. This perspective, what has been the institutional response with regard to sustainability and the SDGs, and how can financial market institutions such as stock exchanges or derivatives exchanges exert their influence on the financial market participants?
Well, in 2021, if you look at institutional investment, across sectors, there's an increase of 74%. Even after COVID, we are talking about 121 billion of project values across the world. And I just want to cite an example. The top 5 FDI investor in Indonesia, rank number 5 is Malaysia. Rank number 1 is Singapore. Rank number 2 is China. And to our surprise, rank number 5 is Malaysia. Now, what does Malaysian company invest in Malaysia for? Palm oil plantation sectors. That's for sure. All right. And energy sectors. All right. Then the rest of it will follow, like hotel sectors, F&B. But let's talk about the top 2. All right. Palm oil plantation and also energy. So the questions come back to that. We know that this Malaysian company is bankrolled by certain financial institution. Has this financial institution disclosed whether the bonds are actually green or actually is non-green? All right. So the burden does not fall onto the regulator alone, but the burden actually falls onto the financial institution and also the businesses to comply with the law that is existing. Now, as I said, the law has been existing. There are certain what we call it benefits, right? For adopting green or sustainable practices. So regulators is always there. They are like our head prefect in school, all right? But there's only so much they can do, and it's always a dialogue process. But again, end of the day, is always the people will. Will the people be able to actually accept the changes as fast as they wanted? Now, we still maintain our petrol price as 2 ringgit and 5 cents for raw 95 per litre. But as we know, the prices is almost fetching 3 ringgit per litre, all right? And government is subsidizing it. I am one person who believe subsidize distort the market. So we need to remove the subsidy, and then people will have the political will, and the will to actually take LRT to work and take buses to work, or even rent their apartment nearby to the office and they walk, or they actually cycle to work. When I was working in Hong Kong for 2 years, back in 18 and 19, before the pandemic. Now we don't own cars in Hong Kong because it's so expensive. So we force ourselves to work. To walk to work. I stay in my room is actually nearby my office. I walk to work. Everything is just walking.
But of course, it depends on the accessibility and all this transportation system, and it's all including because if we don't have that kind of prospect, right? Do you think we can walk from the place where I live to come to the campus to work? I don't think so.
I firmly we can, because based on the report, Dr. Stephan, we have oversupply. We have an overglut supply of housing. We do have an overglut supply of housing everywhere in Klang Valley. So if people were to come and tell us that I live far away, then you must have a view to actually move to a nearer place to your office. I'm just saying an example, right? Now, obviously, if you have children, that decision can be so much more harder. But as I say, if we remove the subsidy, and then and the people is going like I remember in 2004 and 2005, 280. Suddenly, everybody is driving a smaller car. So then suddenly everybody is taking public transport to work. Public transport was actually more than as usual. So sometimes you need to have the cane, right? To have the cane instead of incentive, right? But in this part of the world, incentive outshine, or incentive, or I wouldn't say incentive, subsidy actually outshines incentive actually. So that's why you see that we don't have that in this part of the world. We don't have that will to actually adopt sustainability in every aspect of our life.
Okay, Chris, probably I'd like to, which is planning. Those are the things you just mentioned. Probably we don't look at that also from many aspects. Yes, I do understand what you mentioned about we live around the place where we were, but sometimes it really depends on the urban setting. The whole urbanization is this. I mean, the Hong Kong setting, Singapore setting, in Malaysia, Kuala Lumpur setting, right? It's very different. Even Bangkok as well. So it's not about you can so luxurious that, oh, I'm gonna leave only 5 minutes or 10 minutes walk to the place where I work. So sometimes we don't have that kind of condition to do that, not because we don't want to, just because of the urban setting is very different. So these are the things probably we need to take it into consideration, because it's not just because for the personal preference, but of course there's a many aspects need to take it into consideration, because me myself are involved with many landscape design, urban design. We working with a lot of architects, so they have addressed the issue not just only from the economic aspect, but as well as many all this urban setting is already become one of the consideration why people are behaving in such a way. So this is, I'm just sharing with you, just not make sure that we are not looking at one side of the problem, but we're also looking at the multiple side of the problems. Okay, Chris, what has been the role of regulators in enforcing sustainability, disclosure, and standards? And in what ways can regulation bring transparency, harmonization, and greater impact to the global financial markets? Okay, well, Chris, you can continue to answer that, because I realized that the power trip last night here, so I need to open out the main switch. But I will walk away, but I'm still listening because I'm carrying the Wi-Fi. So you continue to answer that. Okay, go on, please.
Yeah, if you talk about regulators, I do speak on behalf of them, but the general practices is that when they approve certain thematic bonds or green bonds to be rolled out in the market, they usually ensure that the ESG factors is incorporated into that particular bond or particular product, financial product that's been rolled out. So we're talking about environmental, social, and governance, and what are those things that the financial institution has incorporated, and what are those impact, right? And what are those impact that these particular financial product or services would deliver in return, besides the monetary return, actually. So as I mentioned on, investors need to take concessionary, what we call it, financial returns, because the returns is actually based on the KPI achieved, right? So these are the kinds of risk or return profiles that investors need to be willing to fit in, actually. So the role of the regulator is very, very important to ensure that the bonds that is being what we call it created, what are the sort of ESG has been incorporated, and what are the impacts. So number one, we need to talk about the framework of, there are four areas of framework when we want to create a particular what we call it financial product, all right, or we call it TCFD, the Task Force on Climate Related. It's actually the what we call it, the climate related financial disclosure. So number one, we talk about the disclosure. What are the insights that the disclosures provides, and how the firm can actually, the companies that roll out these products can actually ensure that the processes, there is a certain processes to access the opportunities and risks, right, that will be taken when they roll out this particular financial product. So it means that the board and top management will understand, all right, the impact and the work that they need to do when they receive the funds. That's number one. And number two, we are talking about the processes for identifying and managing the risk that it comes with the bond when they invest into the certain sectors that they want to invest in. And number three, we're talking about the metrics and the target to access and managing them. So these are the three. And number four, and number four is actually, I mentioned earlier on, is actually the governance, the strategy, and the risk management. So these are the four things that we need to look into, all right, when we roll out certain financial product. As I said, it's very technical, all right, but I just try to make it as simple as possible. These are the four things when we roll out, all right, or not we, the company rolls out these kind of bonds into the market. So the regulator must enforce that these four things is in the disclosure statement. So the investors will look at it very carefully, and at the end of the day, during the financial year annual return, annual general meeting, these four things will actually be addressed. So in a way, I happened to attend once before in Hong Kong. We talk about it's actually an ESG meeting. So the whole meeting becomes like a, what we call it, a green club debate, you know, a green party debate, actually. Instead of debating financial metrics, they debate about the measurable, the performance, all right, the processes that this bond need to achieve. So it's some sort of like, what I'm trying to say, like it becomes like a green club debate, like, all right, instead of a financial debate. As traditional methods, we will say that, hey, we have invested 10 million to the bond. How well is the funds doing? What are the returns? What are the efficiency that we are trying to improve over here? Those are the traditional language that we speak inside the board meeting. But when it comes to an ESG related bond, it's very, very different, actually. So for example, I just want to add, for example, if you work with a furniture company, I'm just saying example, if you work with a furniture company, we will ask them, how many trees have you not chopped this year? How many trees have you not chopped this year? How many recycled woods have you collected to be reprocessed and reused against as furniture goods? It's just like recently Zara and H&M has started to collect back old clothes, and then they reprocess back again those cotton and to be reused against as not second-hand cotton but repurposed cotton for apparels actually. So these are the kind of language that we bring into the boardroom actually, as compared to the traditional one.
Yeah, of course, you talk about ESG, isn't it? Environmental, social, and governance. It's very different perspective to look at it. But I like the way you say repurpose furniture. How many trees you did not cut this year to produce furniture? I don't know how the furniture maker gonna respond to that, but they need wood. Repurpose the wood.
IKEA does it successfully.
Yeah, it's true.
They does it successfully. They will actually repurpose the wood, all right, and make it into chipboard woods to make furniture again. But again, it's an Asian culture. We want solid woods, wood that is hard, and then you need 4 or 5 men to carry it. We need 4 or 5 men to carry a table, and then the table is good. But the Western world, a table is just a table for the purpose of being a
function.
Table.
It's not a display.
So for us, Asia is very different actually. So again, as I say, it's the
very different.
Yeah.
Okay, I mean, it's that is the beauty of being Asian, being the West from the West. Okay, let's focus a little bit more into the Malaysia context here. The sustainable finance market in Malaysia has seen remarkable growth. While there are a number of ongoing sustainable finance initiatives, there are also various challenges that could prevent the efficient scale out of the sustainable finance market. I have done a little bit of research here. Okay, according to the research, out of this challenges, right, 67% of the respondents indicated that there are insufficient green sustainable finance products on offer. Obviously, survey respondents cited poor data quality or availability, inadequate financial incentive, and low awareness of the green finance in the market as some of the top challenges faced in the efforts towards a sustainable finance market. So, Chris, how to resolve the challenges?
Sorry, I got locked off, but I hear your question actually. Now, there are many challenges in our local market. We don't have a specific what we call that green market. Neither does many parts of the world have a specific green markets. But what the regulator has done over the years is that listed companies, all right, we're talking about listed companies, they need to incorporate sustainable financing into their reports, not only ESG. That's why earlier on I bring in the questions of TMB still rely on coals, right, to produce their electricity. So when we look into that, all right, so businesses, the public listed company or the MNC company, because it is now mandatory for them to incorporate sustainable practices. So therefore, when they work with their vendors, right, or with their partners and associate, they drive down the same things. I remembered back in 2011 when I was having DG as my client actually for a particular project. I was mandated to sign ABC. ABC stands for Anti-Bribery Code. All right, Anti-Bribery Conduct actually, ABC, right? Because DG belongs to Telenor. Telenor is actually big companies in Scandinavian countries. So they are mandated by the government to incorporate anti-bribery. So they roll it out to their vendors as well, people like me, right, who are their vendors to deliver the services. So it has to start there actually. So the regulators will give a framework. The big companies has to follow it, but they have to cascade it down to the SMEs provider. So that the same thing will also, take effects. So it's a pyramid effect, pyramid. So at the top, right, is the regulators, and then you have the MNC, the big companies, and then down there you have the service provider. So it's no longer a political will or business will. It is actually a must to be done across the board. So that is my experience with DG actually. They even have a code of conduct that their employees cannot give more than 10 ringgit. So if you go out lunch with them, you want to buy them lunch, they say that the lunch must be less than 10 ringgit. I say, bro, very simple. I pay 10 ringgit, the balance you pay lah. Simple as that lah. Right? So
can we have 10 ringgit for lunch nowadays?
we can't, you see. So this is what the regulators have done, what we call it, over the years. Now, one more thing. In order for us to be sustainable, not only in financial terms, companies across the board need to incorporate the 30% women into the board of directors. This is something that we have not done. I always like to work with women in the board of directors because they bring a fresh perspective, right? You know, sometimes we are a little bit more chin-chai lah. We say that, okay lah bro, boleh lah, jalan lah. Okay, let's close one eye to us, just get it done lah. But women will bring a fresh perspective into their business because of, maybe because of their motherly nature lah. They are more custodian nature. Nothing bad, but it's very good. But it's sad to see that even simple things, many board of directors in Malaysia does not have the minimum 30% women on the board. So we need that. So we've been talking about that for years, but we need that. So if they come on board, you see being done differently, especially in terms of financing. They are more prudent. They are more prudent. Out of 10 men, probably you find one that is or two that's prudent. But out of 10 women, you find that 8 to 9 are more prudent than us actually. So again, that is something that we also need to look into. The regulation is there, but yet the will to change is are not there. I've been using the word will a lot this afternoon. I think because Malaysia has come to a crossroad whereby it's either you want to do it or you doesn't want to do it. It's as simple as that. Don't have to give a lot of window dressing and says that yes, this is what we're doing, this is where we're going to be in the next 2-3 years and so forth. So I felt that in my course of work, I do a lot of impact investing. We do a lot of series early stage investment and some late stage. But when we invest, we will ask what is the impact of our investment to the society, right? Because we are dealing with a lot of startup founder, they may not understand what is ESG. So we try to make it very simple for that. It says that, tell me the top 3 impact that this fund will make to the society. We want to hear that. Because we believe one thing, if there's an impact to the society, the bottom line will be there. That is why SDG promote triple profit bottom line. Because when the impact is there, the triple profit bottom line will be there as well. You know why? Let's say, for example, there is some coffee company. I'm just saying coffee company because it's very simple and direct. It says that we only source from responsible farmer. So what is responsible farmer that grows coffee? So they will have 1, 2, 3, 4, 5 narrative that says that this is actually responsible sourcing from responsible farmer. They're using this organic or maybe they don't use forced labor and so forth. Right? So because of that, we feel good when we buy that coffee. So wouldn't that drive more consumer into that coffee shop to drink more coffee? As we can see today in the market, the independent coffee shop, I'm not talking about Starbucks or Coffee Bean, I'm talking about the independent coffee shop that is the founders are local young boys or young men or women. And you see that this independent coffee shop has more clients as compared to the traditional coffee shops because of the impact, our consumer impacts. And therefore, it drives the triple profit bottom line into that business actually. So as I said, it's not expensive. It's not expensive. When you can create a model whereby the mass is coming to you, the mass will be coming to you. Those days, we talk about plastics. Then plastics has been charged 20 cents. Nobody's going to pay that 20 cents, not because we can't afford. But then we have this mentality that we go to Lotus or we go to Aeon, we bring our recycle bag. And that recycle bag, we buy one time money, which is, I don't know, 4 ringgit or 5 ringgit or 4 ringgit 90 cents. And it's there forever, actually. So again, again, whether we want to do it or we doesn't want to do it.
Yeah, the masses is important. Yes. What is the level of additional policy intervention required to match the increased ambition of the sustainable finance among SMEs?
Well, this is only a suggestion. We have a lot of regulatory framework. We have a lot of what we call an announcement every day in the press, right? But again, I always believe that a free market will actually dictate by itself. We can't have so much regulatory intervention like a head prefect. because sometimes we have too much intervention from the regulators. It will just scare off investors away. But if we can bring, but if every companies can bring that perspective into the market and the consumers are willing to adopt it, then you will see a very meaningful changes in that. But maybe one suggestion is to bring back GST. One suggestion to bring back GST.
Yeah,
maybe
there's a lot of debate.
maybe not 6%, but maybe 3%. But when we bring back GST, we can lower down the corporate tax. You see, when we bring back GST, we can lower down the corporate tax. When we lower down the corporate tax, I do believe that more FDI will come in. All right.
Yes, exactly. Yeah.
Because the tax is lower. Our corporate tax at 24% is one of the highest in the region, actually. So it will actually deter off foreign investors. So these are the meaningful regulatory intervention. Now, people complain when I consume something, I have to pay 6% tax. People complain. I do understand that. But what we fail to understand is that in the absence of GST, which is a more progressive tax, we have SST, which is a regressive impact coming in. So we don't talk about sustainable financing. We just talk about general financing, right? Investors are not coming in. So again, we are talking about the livelihood of the country for the next 10, 20 years to come. We are not talking about the livelihood of you and me from a if you it's supposed to be a consumer-driven market, whereas SST is like every day, you just consume.
It's of course there is a different approaches as well. So there's a reason. I also see there is the advantages of if we implement this GST, but it's just like if we don't do it well, right, do it correctly, of course there's many complaining because it was failed because of many other reasons. So Malaysia is the only country, right, from SST to GST, then go back to SST, then now they want to come back to GST again. This is the only country in the world actually which is change again and change again. I mean, it's getting a lot of kind of joke to the whole world to watching us. Yes.
So that is why I think we bring back GST and then we tweak the rates. In 2016, we were the top 2 FDI in ASEAN. 2016. In 2019, we are ranked number 5. And next year, Vietnam will overtake us in terms of FDI. We will then be ranked number 6. So in all these, we call it intervention. Steven, I'm losing you?
No, actually, we are losing you, Chris.
Yeah.
Okay, Chris, are you there?
Yes, I'm here.
Okay, I think I think it's a bit jerking at this point of time. Okay, never mind. Let's move on to the looking at the different perspective now. How were the stakeholder if they knew if some of their pension, life insurance premium, or any other personal saving invested in sustainable financial assets? I think a lot of people wanted to know, especially a lot of laymen, including me, wanted to venture this prospect. What is your suggestion here?
Well, if you look at investment-linked insurance, you can hear me? Yeah. If you look at investment-linked insurance, right, or pension funds related investments, I believe that the stakeholder should actually demand for sustainable financing reporting, because sometimes when we subscribe to a certain funds, we only look at the hurdle rates. Am I getting my rate of return this year at better than EPF 6%? EPF is giving 4, so we demand 6, or maybe we demand 7% or 8%. So a lot of investors are still very traditional. They only want the hurdle rate return to be high, but yet they don't ask that pertinent questions. Where is my fund being invested to? Right? Is it in impact investing? or whether in a green bond whatsoever. And I believe that a lot of these pension funds or sovereign wealth funds or even insurance-related investment-linked funds, they are moving towards that, right? They're moving towards that. If you look at North America, if you look at Western Europes, you see that a lot of them are very conscious about their reportings, not because of the regulators, because of the civil activists. So you have civil investor activists. I just read a report yesterday from Business Insider. There is a guy who short Tesla stocks. Shorting stocks. They short Tesla stocks. They buy quickly and dump quickly. So he put up a warning. I'm not quoting him that is going to happen, but he put up a warning that beware that what is going to happen in Tesla very soon. So sometimes the world needs certain people like them, which is actually activist investors, because they will then they will then signal out things that need to be taken in. But Malaysia is still far away behind. We don't have social activist investors because most of our investors
we need a disruptive change. So if like Tesla, these are the these are the people who gone into disruptive change for many things, but it caused controversy. Of course, but of course the Malaysia market here is always play safe, like what you just said. Okay, let's look at this. Do you think in the future we will see a tradable product like what is it called, the CDS, the credit default swap, to create a market misuse and hedge instrument against ESG risk of a company or an institution?
Well, when we talk about credit default swap, that's very technical. Well, we know that it is a contract between two parties because one will purchase protection from another party against losses from the default. I just give one very simple example. Let's talk about companies that issue redeemable preference shares. We know for a fact that a lot of companies that issues RPS will not be able to redeem back the RPS when it comes to maturity. It's the same as Malaysian government. Malaysian government issue MGS, Malaysia Guarantee Securities. It's the same as US. They issue their security bonds. But when the time comes, they are not able to, what we call that, to redeem back. And what they do, they issue another bond so that they can actually buy back the old bonds and continue with that interest. Now, it is always happening in the capital market, because this is how the capital market take place. Because it's actually a debt market. A capital market is actually a debt market, right? So if you talk about people buying over, now there are many practices. Whether they are sustainable or not, that is another question that we can address later on. But people are buying bonds. Like 2007, after the Asian financial crisis, the government began to rationalize and begins to merge all the banks. So Maybank took over what we call it Filial Allied Bank. Remember that Maybank took over Filial Allied Bank, and Filial Allied Bank has a lot of debts. So when Maybank took over Filial Allied Bank, they don't only take over their assets, they take over the debt as well. Who are the first line of debtors? The first line of debtors are the fixed deposit holders. So this kind of credit swap has always been there in the market. Now, the best example when we talk about sustainable financing or ESG is actually carbon trading. Carbon trading is a product created by the West, so that when you don't have enough credit for your carbon, your report will not look good. You actually take your profit and buy other people's carbon credit. So in a way, it's actually a cane and carrot approach. The carrot is that you will have enough carbon credit, you'll be able to present a flowery good report. But the cane is that you have to take out your money, all right, and buy that carbon credits so that you balance your carbon actually. So I thought it's good. It's actually what we call a cane and carrot approach. But yet, if a company makes so much money, they don't bother about carbons. They can just keep on taking their profit to buy over carbon credits. So again,
they're just taking advantage. Yeah,
you're right, Stephen. It's taking advantage. So there must be certain forms of regulatory intervention to stop these abuses. So talking about credit swap, so carbon tax or carbon what we call credit is one very good example that is happening in the market today.
Okay, Chris, let's focus about you now. Okay, how many of your investments are impact orientated, focused on supporting social enterprises in emerging and frontier markets? Could you give a brief example of one of your ongoing impact investments?
Well, I can give two. We have invested into two companies very early on. We have one which is Dana Wellness. They started as a spa. Who's going to invest in spa anyway? But in 2012, we were the early angel investors or private investors that went into their business. So we transformed the business from a traditional spa to a wellness, a full-fledged wellness clinic. All right. So each clinic is about 4,000 over square feet, and we price it at a medium range so that the mass market will be able to afford it. All right. So the kind of treatment that we give is, let's say I give you a very simple example: enhanced counter pulsation (ECP). You can go and Google about it. So
Google, beautiful Googleization.
Yeah, we Google everything in our life. So
amazing.
So this ECP treatment is a form of treatment that helps patients, whether they are in their early 40s or maybe to the late 50s, that have irregular heartbeat and high cholesterol. So if they go to the hospital, this kind of treatment will cost them 800 ringgit. 800 ringgit, right? And the cost of the machine is 250,000 cash. There's no installment, there's no loan. So we told ourselves that we want to service the customers, but yet at the same time make decent profit. We price it at 480 ringgit as compared to the hospital at 800 ringgit. So we price it at about 30% cheaper, 30% cheaper, and it's so much accessible, to the mass market. And today our appointments are full. Every day our appointments are full. As one of the shareholders and founders, I also have to book for appointment, and my staff have to tell me there's no slot, wait for next week. So it means it's good. So that is the form of impact investing that we're having, providing cardiovascular treatments, early prevention cardiovascular treatment to our patients. So that is one on Dana Wellness. Then the second one, Jocom. Jocom is actually the Malaysia first grocery company in Malaysia. We got the Malaysia World Records back in 2017. We beat Tesco by a month. Tesco uploaded apps into Google Play Store, but we uploaded 1 month earlier than them. So we can claim that we are the first Malaysian grocery app store. So we source our products from directly from the manufacturer and from the farmers. So and then if you order right now at 12:52 p.m. as I speak to you, before 12:52 p.m. tomorrow, the goods will be delivered to you. We have a 24 hours delivery policy from the date and time of that you order, and the prices is about 20% cheaper than the market. Reason because we source directly from the manufacturer and we source directly from the farmers. So I always give this. There is a very beautiful lamb chop produced by a lady in Kampung Melayu Sungai Buloh. All right, Kampung Melayu Sungai Buloh. It's called Hatini lamb chop. So I used to buy from the apps at 40 over ringgit for 6 pieces of lamb chop. And this same lamb chop, that lady sell to Concord Hotel. So the lamb chop actually comes with the gravy. So, but when we go to Concord or Shangri-La, she supplied to Concord and Shangri-La those days. The cost of the lamb chop, Shangri-La and Concord just heat it up, put the gravy and put some mashed potato and some veggie. They sell it to you at 70 ringgit per 2 piece. So, but I got it for 45 ringgit for 6 pieces. So again, we
service, aesthetic, design the dishes is different.
so you pay for the services, but the sauce is coming from the same sauce. So we aim to actually, bring food on the table to every family at an affordable price, even lower than the market. So this too is a very good example of impact investing that we are doing. Now, Jocom has a very fantastic business model. Their last year revenue, even though their online was burst because people order online. So last year they did a GMV of about 20 million revenue for a startup company. This year we are doing about close to 30 million GMV this year. So you can see the kind of impact things that we are doing. And then for the wellness company, last year their revenue was about 10 million. During pandemic, during pandemic, their revenue was 10 million. And this year, I think we are aiming at about 15 million actually. So that's kind of impact investings that we are aiming for. I got a lot of examples, but I think this two is actually very impactful enough on that kind of impact.
Yeah, it is. I think, yeah, definitely. It's really, I can imagine the whole thing. So how great of the leeway to what the sustainability prospect, how you practice that. Okay, Chris, how do you square your strict quantitative target to exit sustainable financing with the need of the capital markets to transform beyond your deadline, especially those are the projects you're working on? Will you shift the problems to somebody else as you exit, or will you continue to finance them in one way or another to make an impact?
Well, it all depends on the stages of investing. Some of this portfolio, as they move to Series A and Series B, we will assist them by linking them up to specific VCs that has the mandate to invest in this kind of project. So we will continue to handhold them. Many of the co-investors, they still want to retain us as a GP, the general partners of the funds, so that we will continue with the legacy work. All right. So when we bring a startup, it's not a 1 year work, it's going to be a 7 years work. Grab, for example, all right, it took them 7 years to actually to exit, but the VC behind them are the same people, or not VC, the GP behind that are the same people actually, that brings them until they exited the market. So we cannot shift the problems. It's not as easy as shifting the problems actually, because when we go into a deal, a specific deal, only we will know what is the issue. And then probably sometimes when the problem is too big to handle, we will have a co-GP come in to manage, like a co-team manager come in to manage the projects or the portfolios actually.
Okay, Chris, let's open up. I think it's the time to take a look at some of the questions posted by the audience. This is, I think, we have some questions here. I'm going to look at the question which is, I think, is more appropriate for the discussion today. This is from the registration. Isn't it time-consuming to go green? Won't the initial cost will also be really high? So why even bother if the cost saving is not that drastic?
Well, good questions. Very good question, right? Is it time-consuming to go green? Would the initial cost be really time-consuming? Let's take, for example, by 2025, our climate temperature rose up more than 2 degrees Celsius. Let's take, for example. Okay, we didn't do the go green approach at all. It would then be more costly to live as a human being on planet Earth.
You mean we Malaysia here?
Generally, we. Right? It will be more costly to live in Malaysia or around the world as compared to today. Let's assume in 2025 there will be more flash flood in Kuala Lumpur. Let's assume it.
Yeah.
Right?
You can see there's a sign. Actually.
LRT breakdowns. Okay. LRT breakdowns. How are we going to go home? They call a Grab. The Grab say, "I'm going to charge you triple the fees than usual." Will you pay triple the fees than usual to go home? You would definitely pay because your children is waiting for you at home. And then you look back 3 years later ago, we regretted that we never adopted the Go Green policy. If we would, so doing business is going to get more expensive by 2025 as climate change goes, as our temperature rises up, and to sustain ourselves as human will also continue to be more expensive as we go out. Why? In terms of food security, when the crops are not producing enough during a hot weather, or there's so much flood happening in Cameron Highland, vegetable is going to be becoming more expensive. Meat is going to be becoming more expensive. It's getting more expensive to sustain ourselves as human by 2025. So therefore, you may look at the cost is going to be expensive now. But I said it much very early on, if we adopt a mass approach, everybody wants to go green, the cost would definitely comes down as it goes. Like I take, for example, sourdough. I'm borderline diabetic, Stefan. So I take sourdough. I don't take white bread. Sourdough is expensive. like 7 ringgit a piece of a loaf of bread. But if let's say, for example, everybody wants to eat sourdough, wouldn't the price be actually scaled down? Last year, I happened to be
there's a demand. Yeah,
there is a demand. It's a supply there. Last year, I was very fortunate to buy Gardenia sourdough, and it was cheap. To my surprise, a loaf of Gardenia sourdough was about 2 ringgit 50 cents. But today, I
depends how you made it. Depends how you made it.
but today, I can't find it anymore in the market because there's no demand for sourdough. So if let's say, for example, everybody demands for sourdough, and I do believe the prices will go down actually. So if everybody demands for electrical cars, the prices will actually go down. So the cost is now high, but we have to develop it into a mass market model. There's another question: how can APU students get started in finance? I'm not sure if APU has an incubator. I'm not sure if APU has an incubator program, but if you do have an incubator program, that is where you can get started. I know Tar University College has an incubator program. I'm one of the mentors there.
Okay.
So I'm also a mentor in Magic. Now it's Maranti, right? We actually help the students to incubate their ideas from ideation stage all the way to roll out of their products. So it's more of R&D. So once your R&D has been validated, then we will help you to introduce you to certain angel investors, or probably if I myself is interested in the deal, and then that's how you can actually get started with the finance. But we have to validate your ideas first. Right?
Definitely, I think we had talked about this the last couple of days. So actually, we can bring this dialogue further. As I said, you're always welcome to our campus, and then we can set up a kind of discussion with my bosses here. Then we can see what are the things we can progress further. This is definitely what I open up for this kind of dialogue. Okay, so another question from the audience: will the cost be high when we change the green and sustainable state? Change to a green as to sustainable.
As I mentioned earlier on, the initial. Sorry, I got disconnected again. Do you know what happened?
Oh, no problem. Come on. I know that there's a lot of technicality. Okay, never mind. Just go ahead. This is the question from the audience here.
As I mentioned earlier on, the initial cost will be high, but when we manage to adopt a mass market, the cost will definitely come down. I do remember at one point of time, the cost of a Honda Insight, which is a hybrid model, is about 80,000 ringgit, which is not expensive. It's about 5-6 years ago. But the cost of servicing that car is expensive. But why is the cost of servicing that car is expensive? Because there's no mass yet. But if everybody buys Honda Insight, the cost of servicing that car will definitely go down. It's just like you see a lot of Myvi on the road. The cost of Myvi spare part is definitely cheaper because there's so much Myvi cars on the road. So that's why they produce it mass. So we need to develop that mass market actually. So that is why I always say is whether we have the will or not, all right, to participate in such market.
Okay, Chris, all right. So now we are going to change the gears a little bit. We have been talking about and all the concerns that we have been discussing on the show. I would like you to be able to share your ideas and see what other listeners are thinking about that in a little bit. The vast majority of the survey believe that financial institutions should be playing a key role in promoting green finance and sustainable funding options, either through amending the regulatory frameworks, encouraging green loans and products, or introducing climate change consideration in their monetary and financial policy operation. A number of the central banks and supervisory authorities are already promoting sustainable financing options explicitly or implicitly. So why should central banks and financial supervisors care about climate change and environmental sustainability?
Well, not a very tough question to answer, but let me put my thoughts.
I know that's a very easy question. It's just kind of a little bit too comprehensive, but I just need your little bit a few key points. Probably can enlighten Those are the people who are in the market.
Well, number one, I mentioned just now, we talk about impact bonds, right? Impact bonds that has an outcome base, right, between the investors and also between the people that is utilizing that bond actually. So when we talk about regulators, when we talk about central banks, we can talk about impact bonds has two types of bonds. Number one is definitely green bonds, and number two is actually social bonds. I have not touched about social bond this morning. Now, to give a little bit more narrative about social bond. Social bond is very popular in 2020 when the pandemic begins actually. So it is actually based on a set of principles or guidelines that wants to have a positive social outcome, such as health or well-being improvement and poverty reduction. As we know, when the pandemic hit, a lot of M40 actually become a lot of T20 become M40 and M40 become T40. And currently we're not T40, we're talking about T50 from the 40 become 50 already.
It's not good, isn't it?
Yeah, so across the world, many central banks have encouraged the issuance of social bonds so that these social bonds can be used to deliver specific targeted responses to uplift the specific community predicament because of the COVID-19 pandemic. Now, one very good example is the United States. They didn't issue special bonds, but they issued social grants. During the Trump administration, they have this Operation Warp Speed. Operation Warp Speed is actually for the what we call the vaccination program to produce vaccine. So the United States government actually gives so much grant to Pfizer's and to these drug companies to speed up, all right, the production of the vaccine. We know that the vaccine is not perfect, but at least it does help our daily life today. So those are one of the examples of impact of social bonds that can be done. Now, again, you see, Stefan, the United States government actually give grants to these drug companies to produce the Pfizer, not Pfizer, the vaccines, all right? But where does this money come from? This money actually comes from, who? This money actually comes from the American Guarantee Securities, the AGS, the American Guarantee, like MGS, the American government actually issued securities bonds to get in the money. So the American government actually channeled these security funds, the bonds, to the private companies. But because it's a form of grant, but where do they make back the money? They make back the money through the taxes. So
as usual, there was a leeway.
So when they collect back the taxes, they will be able to offset against the bonds that they have issued. So it's a waterfall. It's a two-way or waterfall effect. It cascades up, comes back down, and then it goes back up. So it's a very meaningful way of doing social bonds to have a positive impact to the community.
Chris, I learned something today. Thank you so much. That's very nice, actually. Okay, Chris, has your organization issued any financing instrument or implemented regulatory policies or initiative that aim to encourage private financing for low carbon investment or any related green savings instruments?
No, we do not, but we focus very much on impact investment, as I mentioned earlier on. So the funds that we invest in, or funds that we invested in, are mainly on impact investment that incorporated ESG. So it's not very specific as per se green bonds, but it's impact investment, because the word green bonds or green investment is actually part of the umbrella of impact investment. So you have the impact investment as a father of everything, and then down there you have the social bonds, you have the green bond and whatsoever.
Okay, Chris, this is great. Thank you so much for giving us the time today from your busy schedule, for sharing all of your expertise, and it gave us a lot of think about as well, and me too, and I learned something today. It is absolute pleasure indeed, Chris. I appreciate it. Thank you. Chris.
Well, thank you so much for having me. Love to chat with you again. Thank you so much for the opportunity.
Yeah, definitely. We will talk about this further because I will invite you to come to the campus, and then we can discuss a bit further for those are the incubator you just mentioned about this, and I will bring along with my bosses as well. Thank you, Chris.
Okay,
right.
welcome.
A little food for thought here, listener. Capital markets can have a decisive impact on the level and direction of sustainable investment and can contribute towards filling the financing gap for the SDGs. Increasingly, financial institutions such as stock exchanges and derivatives exchanges, which is Chris has mentioned, that have been integrating sustainability values and performance criteria in their activities. What they have done, Chris has cited many examples, even in his investment. There has been a proliferations of sustainability-themed financial products in recent years, including sustainability-themed funds, bonds, and derivative products. Chris has addressed that. Much work has been done over the past decades to integrate sustainability into different parts of the financial system, including asset owner, banks, insurance companies, and stock exchanges. Better coordinating these activities and effectively monitoring their impact can help accelerate the trend towards the future of finance. With that, Spotlight Dialogues episode is live podcast organized by the Special Interest Group in Circular Economy from Integrated Sustainability and Urban Creativity Center at Asia Pacific University of Technology and Innovation, APU. To keep up with the show, go to APU Facebook page. There was our episodes of a truly incredible seasons we have lined up for all of you. So please be sure to like and follow our APU Facebook and wherever you watch and listen to live podcasts to never miss an episode. If listeners are curious to know more about us or find out more information, please drop me a line. Email address has indicated on the right top corner of the screen. Thanks for tuning in. Till then, take care and each other. Happy weekend.